How to buy life insurance? Life insurance coverage can help you plan for the future and provide financial protection to loved ones after your death, but finding the right policy can be overwhelming. Our guide to buying life insurance can help you make important decisions: the policy you choose, the amount of coverage you need, and the insurance company you select. Decide if you need life insurance. Before you begin, one of the first questions to ask is if you need life insurance. According to the Insurance Information Institute, most people do. Though everyone's personal and financial circumstances differ, a life insurance policy can be a valuable safety net. That's particularly true if any of the following are true. Your family or beneficiaries would face financial hardships if they lost your income. Your dependents would be left with a large amount of debt after you die. You want to cover end-of-life expenses, including funeral, burial, or medical costs. You want to pay for a dependent's tuition, daycare, or retirement costs. What if you have life insurance through your employer? The Life Insurance Marketing and Research Association, LIMRA, cautions consumers against relying solely on their employer-sponsored life insurance coverage, which may not provide a significant safety net should a primary wage earner die. Within 6 months or less, 44% of U.S. dual-income households would run into financial trouble. If you have an employer-sponsored life insurance policy, also known as group life insurance, take note of the death benefit, or the lump sum, your beneficiary would receive if you die. If it's not enough to fit your needs, then a standalone policy may be a good option. As Catherine Theroux, Director of Public Relations at LIMRA points out, employer life insurance may not follow you when you leave your job. Though, determine how much life insurance you need. The amount of life insurance you need depends on various factors, including your personal and household income, the needs of your dependents or prospective beneficiaries, and your financial goals. Here are some questions to ask when determining your policy coverage amount. How will the loss of my income affect my dependents? How long would I like my income to provide financial support for my beneficiary? How much will my dependents or spouse need to cover the mortgage or rent? What day-to-day expenses, if any, do I want to cover for my beneficiaries? How will my loved ones cover end-of-life expenses, like funeral costs, estate taxes, etc.? Do I want my life insurance policy to be used as an inheritance? Do I want part of my life insurance policy to go to a charitable organization? It's a good idea to discuss your concerns and intentions with a trusted financial advisor who can help you identify a policy that supports your loved ones and your larger financial strategy. Find out if life insurance payouts are tax-free for beneficiaries. Determine which type of life insurance is right for you. There are two primary types of life insurance to choose from: term life, which lasts for a set period of time, or permanent life, which covers you for as long as you live. Understanding the defining characteristics of each type can help you choose the right one. Term life insurance. Characteristics of term life policies. Provides coverage for a limited period, typically between 1 and 30 years. Often the most affordable life insurance option. Predictable premiums and a guaranteed death benefit. Term life insurance is life insurance that provides coverage for a specific period, called a term. Policies can have term lengths that are short, lasting 1 or 5 years, or that remain active for longer, like 15 to 30 years. Term insurance policies typically have fixed, or level, premiums that stay the same for the duration of your policy. Term life insurance also offers a guaranteed death benefit, or a guaranteed sum of money, as outlined in your contract. With term life policies you may have the option of two types of death benefits. One is level, which means that it will stay the same for the entire time the policy is active. And the other is decreasing. This means that the amount of money your beneficiary would receive will decrease over the life of the policy. Term life insurance policies may also be renewable, meaning the policy can be renewed at the end of the initial term. They can also be convertible, which means the policy can be converted to a permanent policy. If you choose term life insurance, the payout will only be received, as outlined in your contract, after your death. This type of policy does not carry an investment component, and you cannot borrow against or withdraw from it while you are alive. For more information, Visit our What is Term Life Insurance Guide. Permanent life insurance. Permanent life insurance refers to policies that last for your entire life. As long as you make your regular premium payments, your coverage won't be interrupted. Like with term life insurance, there is a death benefit that is paid out to beneficiaries after you die. Permanent life insurance also typically has a separate cash value component, which is separate from your death benefit and functions similar to an investment account from which you can withdraw or borrow available funds. When you pay your premium, part of the payment goes into an investment account. The cash value can also grow or fluctuate based on the type of insurance policy you have. In some cases, growth depends on interest rates or stock and money market mutual fund performance. In others, the value grows as the insurer distributes a portion of company earnings, also known as dividends, to account holders.